Welcome to the weekly strategy session. Great to have you with me as always on this Friday afternoon. Lots of interesting things to go through in the markets. Lots of interesting things happening at the moment. And before we get into that, as always, everything today is general commentary only, no personal advice given. Having said all that, I think it's time we get straight into that first chart. So let me just call that up. This is ASX 200. We have up on the screen. And big developments in the last week. We've got the ASX 200 and the All Ordinaries, for that matter, both hitting new all-time highs. Now, really interesting, isn't it? Not many were giving this a chance just back in October. You think about the sentiment towards the market only 4 months ago. Not many people would have been thinking all-time highs are around the corner. And then you go back to the October prior to that, so October 2022, and you might remember that just about every economist thought a recession was a certainty. Not a near certainty, but pretty much a certainty. And it just goes to show how hard prediction is. None of us can see the future. So it really isn't surprising when we look back at predictions and forecasts and find that they're wrong. And so then that raises a question like, how do you invest? How do you invest in this stock market when you've got that backdrop against you that prediction and forecasts often don't play out? And I think the answer really comes down to, responding to the price action and managing risk. I think they're the two key things that we can control. We can control how we respond to price action and how we manage risk. And if you've been responding to the price action over the last 4 months, you've probably been buying shares as this market's moved higher. Now, one of the things I've been saying over the last maybe the last month or so now is that I thought we'd see more backing and filling. Big run from the October low up to the February high, and even prior to that, up to the January high. It was a big move, and I thought maybe we're going to get more of a period of chopping around, more backing filling around those moving averages. And but look, so far that hasn't been the case. And as I was saying earlier, like what we think the price action should do, it just often won't be the reality. And that's why I think a rules-based investment process, I think it's just so important, really. It's because the thing when you've got this rules-based approach is it doesn't hinge on predicting the future. You don't have to see the future. You don't have to predict it. What you do need to do is you've got to have that good set of rules, and you've got to be able to respond to those rules and follow them. And instead, then it's all about responding to the price action, not trying to predict what the market's going to do next. Now, last week I was telling you about a scenario. I was telling you about a scenario last week that I said I think we need to consider, and that is that prices from this tight range the market's been in over pretty much throughout February, that the one scenario was that the market does actually accelerate out of this range, and we get a series of new all-time highs. And the big point I've made is that this is a large trading range the market's been in for a couple of years. You've always got to pay attention, I think, to large trading ranges when they break, because they often lead to big moves. And maybe that pullback, which I've thought was likely, maybe that's not going to happen. And if it doesn't happen, I don't want to be on the sidelines waiting for something that I think should happen or is likely to happen, because likely doesn't lead to certainty. It's just a possibility that we assess. So with that in mind, I don't want to be left on the sidelines. Should we get this big breakout and the market runs, I want to be in the game. And that's what it's been all about, following that price action. So as I've been telling you, I'm long stocks. I've been building my position over the last 4 months as the market's been going up, as we've got above moving average, as signals have come in. I've been building that position up. I actually added a bit of exposure today, a couple of stocks, just getting recent buy signals. So I've added a couple of stocks into that portfolio. I'm still hesitant though to chase stocks that have run hard. And it is interesting because a lot of stocks have run hard. I'm looking at the some of those multi-motion signals. So for people who aren't members of Motion Trader, it's second, third, and fourth and fifth entry signals for stocks after they've given their initial signal. I'm looking at some of those, and some of the stocks over the last month or two, there've really been some strong upside moves. So my preference is still looking for those stocks where we're getting fresh breakouts or stocks which are moving off their moving averages, not ones which are really like, look like the ASX 200 here, where they've just had that strong vertical lift off and maybe stretched above their moving averages. I'll show you a couple of examples of the type of stock which I'd be interested in, the type of setup that I'm interested in a little bit later on. And really, as I'm always telling you, I'm using those wide trailing stops. If we do get that larger pullback, if it does develop, it's and it is still entirely possible that a pullback does develop. Like one possibility is that, and this is a pattern I've been watching evolve. I haven't spoken about it as yet because it hadn't evolved enough. But what you could do, you could put in your classic bearish wedging formation just by joining up the lows, joining up the highs. Markets just pushed to a new high. Interesting, got to the new high earlier today, and then there was a bit of selling, came in at the highs. It's starting to push higher again now, which is encouraging. But yeah, look, I'd just keep an eye on a pattern like that, because if it does stall at these highs and we get a bit of a pullback and you get a break from that pattern, that's when you could potentially get that larger pullback, which I've been talking about for several weeks. But look, that may not happen. We may not get that breakdown, and this pattern could disappear if the market accelerates higher. So it's just, it's just why I say, look, I'm running with the current strength. I'm aware of other possibilities, and I'm using those trailing stops. And I think the trailing stops are a really important one because it keeps the upside open, and but it also gives that protection should the selling come in and something else start to happen. And but look, hopefully those wide trailing stops can see off any potential pullback should that happen. And look, markets, we're always dealing with uncertainty. We don't know. No one knows. Is the ASX 200 going to take off from here, or is it going to go sideways or pull back? We don't know. What we're doing, we're balancing risk with the potential for profit. So that's what all these strategies are about. It's not about saying this is what the market's going to do next, because I don't know, and anyone who tells you they do know probably should turn them off, because they actually, we know they don't. We know nobody knows. So we're balancing risk with the potential for profit. And I think the key is not getting too fixated one way or the other. Like sometimes people get just so risk averse, they can't take the signals and they can't get into the market when it's moving higher. And then other people, they just see the market going higher and they say, look, this is breaking up. It's all in. I want everything, all on black. I want everything in the market. And then we do get a pullback and then they get into trouble. So I think you got to keep an eye on both your risk and your potential reward. Keep them both in sight. Don't get fixated one way or another. Now, I'm going to move on to the Small Ords next. There's a few things going on there we want to have a look at. Then we've got the commodities. I've got a couple of stocks for you I want to go through and have a look at. But of course, look, and if you're getting some value from this, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. It really helps a lot when you do those things. But that wraps up the free section. So hopefully that's been interesting. If you're not a strategy session member, come across. Just click the link below, join up. Doesn't cost very much. Really inexpensive way to get some ideas. That's what everything's about. Get ideas, get possibilities, get things to think about. Get some ideas which you can take action on. That's what I do over the rest of this strategy session. Okay, now let's jump into the Small Ordinary.